Buying property is one of the biggest financial commitments we will make in our lives. But getting on the property ladder can be difficult for some. Saving for a deposit while also meeting your other expenses can take years, more so these days as property prices quickly rise. For others, perhaps buying a home is too much of a financial commitment, and they prefer to live their lives free of the burden of a mortgage. However, many financial experts advise that investing in property is a viable investment option to diversify your portfolio. Fortunately, there are ways to include this in your investment strategy for diversification, particularly in the current bear market. And there is one option in the UAE that involves fractional property investing. Think of it kind of like crowdsourcing. A certain number of people invest X amount of money and collectively buy a property together. But what exactly is fractional property investing? How much do you need to begin? And are the returns worth it? Welcome to Pocketful of Dirhams. I'm Felicity Glover, the personal finance editor at The National. Joining me today is Siddiq Farid, the co-founder of real estate investment platform SmartCrowd, who's here to talk about the pros and cons of fractional property investing. Before we begin, don't forget to subscribe to Pocketful of Dirhams on your favorite podcasting app. Welcome to the show, Siddiq.
A pleasure to be here. Thank you for having me.
You're welcome. So I'm a non-property owner, but I have to say I'm intrigued by this concept of fractional property investing. Can you explain the concept behind it?
So the whole idea behind this is to give many people access to this alternative asset class, which is real estate. Many people want to invest in it, but are unable to do so due to large capital requirements. Often it's a very large investment for many people that either don't have enough capital or have to get financing. So what we embarked on was fractionalizing it, meaning breaking down the investment in smaller chunks so people can pool their capital together and collectively own a investment property, a buy-to-let property. So think about it, a $1 million property, and you don't have $1 million dirhams, or you don't have the ability to get financing for $1 million, but you have 100,000 dirhams. So you can put 100,000 dirhams and own 10% of the property. And any returns that are generated from that property are proportionally allocated to you based on your investment. So 9 other people can put 100,000 dirhams each, and collectively those 10 people can own that property and benefit from any returns that are generated on that property.
Okay, so you mentioned $100,000 dirham or dollars. What is the minimum amount that a person could invest?
Yeah, so on our platform, we made it very, very simple, right? So the idea is to give masses access to this, right? So our minimum investment is 500 dirhams. So you can start off as little as 500 dirhams and own a small piece of percentage of a property and start putting your capital to work, where we mostly focus on rental properties currently on our platform, give a regular rental income on a monthly basis, and that money can be redeployed onto the platform so you can compound your investments even faster.
Okay, so I'm intrigued as well that on your website you recommend that investors stay invested for 5 years. Are there other periods that you can invest for, or is it this is just what you're recommending?
Yeah, so there's a couple of different things attributed to that, right? So if we take a step back, right? So in terms of what we're trying to do with the SmartCrowd platform, right? We're trying to solve 3 key problems, right? So one is people not having enough capital to acquire an investment property. Second, many people don't have the ability to go source good investment opportunities. And third, a lot of people don't have the necessary skill set, et cetera, to do proper due diligence or gather the data to make effective investment decisions. So we solve all those 3 problems by creating a digital platform where, one, we've fractionalized the asset class. So your entry point is very low, 500 dirhams for a minimum investment. Second, we pre-vet all investment opportunities that go into a platform. There's a 100 data point criteria system that we sort of use that to score a property, to qualify it before it goes onto the platform. And then we provide all that information to our investors, all the market data, independent valuation, our due diligence on the property, the investment thesis around that. So as part of this offering, we're also educating our users, hence making them part of the smart community, the smarter crowd, to make those decisions and invest in that property. And part of that is, part of our education is, we try to preach patient capital, right? Typically, real estate gives you regular income. And real estate generally over a period of time appreciates in value. It might go through cycles, but generally speaking, on an over long-term period, the prices tend to rise, whether with inflation or just through various structural changes that the real estate cycle goes through. And so we preach long-term investments from that perspective, and there's also other mechanics in there. That's why we sort of have a 5-year anniversary, a holding period. But that doesn't mean that exits cannot happen sooner than 5 years, or can be extended beyond 5 years depending on the market condition. We've done a couple of exits already for some of the holdings where the prices have really appreciated. Our investors received very attractive unsolicited bids where it was very compelling to sort of walk away from those. So we put the case forward to the investors, and the investors decided to exit and redeploy that capital into other opportunities onto the platform. So it's not a set in hard stone. And then we also offer a secondary market on our platform. Essentially, what that means is people have the ability to sell their fraction ownership to other investors on the platform if they want to liquidate or sell and realize their gains sooner than the 5-year completion of that investment.
Okay, so would you say that on average you hold investors stay, in the property for about 5 years, and then, but what happens after that? I mean, I know that you're a relatively new platform, but do you have sort of 10-year kind of ideas about where it will go to?
Yeah, no, absolutely, right. So the way the platform is designed, right? So on 5 years, there's a mandatory vote for the investor. So we don't take any discretion in these investments, right? So we facilitate the transactions. We have a marketplace. Investors come and decide where they want to deploy their capital in terms of which properties they want to invest in. We don't take those decisions on behalf of the investors. So it's not like you're giving SmartCrowd money and SmartCrowd deciding where to allocate that capital or where to invest that money. All that power lies with our investors. So, and the decision to sell also lies with the investors. It's a voting mechanism. It's a democratic process. There's governance put into these legal structures to protect the minority investors, particularly. And so on the 5th-year anniversary, there's a mandatory vote. There can be a vote called involuntarily prior to those 5 years in situations like I just explained, where we had an offer come to us and it was too attractive not to pass this on to our investors. We put it to our investors, they put a vote, and they decided to sell. But on 5th-year anniversary, there's a mandatory vote. At that point in time, investors can decide to fully exit the property or continue to hold the property beyond those 5 years. And if those people that want to liquidate or exit, they can do so in the secondary market and not necessarily hold on for longer, right? But majority of the people that come onto our platform use this as a long-term savings investment scheme where they continue to deploy capital on a regular basis. Any income that is being generated, they tend to reinvest. Majority of our investors are reinvestors. They have multiple investments on the platform because it's very comfortable, a very easy, convenient way of getting exposure to this great asset class.
Absolutely. And how many people on average would invest in the one property?
So those volumes have increased as the popularity and awareness has increased on the platform. A year ago, I would say on average, we would have 50, 60 people to a property. Now we have anywhere between 100 to 200 people to a property. Minimum investment is 500 dirhams. We have people investing 500 dirhams trying it out. Their second, third investment is usually higher, and we have people putting as much as 100,000 dirhams to a property investment as well too.
But wouldn't the more people who are doing that, wouldn't that dilute your returns?
Not necessarily, right? So the return is a return. It's a 7% return, for example. Whether you're investing 1 dirham or 100,000 dirhams, you're getting a return of 7%, right? So a return should not be looked in nominal terms, right? Return is a function of how much capital you're putting at risk. What's important is the return that you're getting, the rate of return, which is 7% vis-a-vis the risk that you're taking, is that sufficient or not, right? So whether you put someone that puts 10,000 dirhams or 100,000 dirhams, the return on that capital is going to be equal to both people, whether the person that's putting 100,000, obviously the nominal number will be different because one person is putting 100,000 as opposed to 10,000 dirhams. But the rate of return on that capital, we don't discriminate between someone putting small amount or someone putting large amount.
Okay. And what about the returns? When are they paid? Are they like monthly, quarterly, yearly?
Yeah, 12th of the month, 12th of every month, in your wallet, your rental income is deposited. If you have a property that is active and rented, whether it could be a long-term rental, it could be a short-term holiday home rental, 12th of every month, you get money into your wallet every month.
I mean, for example, the Dubai property market is, prices are rising very quickly. So I imagine that investors in this concept, in this strategy, are quite happy with the returns that they're getting.
No, absolutely, right. That's the reason we have a very sticky product, meaning once people come onto the platform, they see their money working right away for them. They're encouraged to put more money onto the platform. So we have a very good repeat investor base, right? Majority of almost everybody on our platform becomes a repeat investor on our platform. But real estate is, like I said, it's a long-term investment. It goes through cycles. What's important is by allocating small amounts of money in various different properties, you're building a diversified portfolio and you're not putting all your eggs in one basket. So what that does, it allows you to be more patient with your capital, even if there's slowness in the market or the market corrects, etc., because you don't have all your money sitting in one property. You haven't taken leverage and overexposed yourself that if things get really bad, you're in a very difficult position. And then, you end up exiting those properties at the worst possible time. Because you cannot sustain that investment, and then you also crystallize your losses. So you have no point of recovery. Whereas this way, you can be more patient, you can plan it better. God forbid your liquidity situation really gets tight and you can liquidate one or two investments and crystallize losses on those if the market has come down, while still maintaining your other positions for the recovery. Be patient over time. And we saw during COVID period, we had a lot of people come take advantage of the price depreciation during COVID. A lot of people were afraid to take big bets, right? To go buy a property. They don't want to put million dirham at risk, but they were willing to put 100,000 dirhams at risk. And they use our platform to do that. And obviously the price appreciated, as the market has really done really well in the last 2 years. And those people benefited, without taking too much risk. So, the platform not only provides you easier access, but it also allows you to invest in this asset class in a much better risk management basis as well too.
Yeah, okay, that's interesting. How many properties do you have now, and what are the price ranges that you bought them in?
Yeah, so we were approximately just over 90 properties in total that we have transacted over the last 2 years. Majority of that has happened in the last, I would say, 12 months. Initially, when we first started, we were focusing a lot on the smaller units, very income focused. So, studios, one beds in the sort of, I would say, 300 to 600,000 mark. But over time, obviously, the prices have moved up. Demand has increased on the platform and so forth. We're still mostly focused on studios, one beds, some two beds as well too. Average ticket size is anywhere between 750,000 dirhams to 1.5 million dirhams. These are the sweet spots where it generates really good returns. We haven't really gone after the really high premium assets in the millions of dirhams at this stage because that market is quite different in terms of return profile. And it's more suited for end user product rather than investment product.
Okay, that's really interesting. Do you think that you will at some stage go for sort of more luxe properties?
There will be an opportunity. It will be for a different segment, right? Because you have to keep in mind if I'm going after like a 20 million dirham villa, minimum ticket of 500,000, you can imagine how many people will have to invest in that particular property to make up that 20 million quantum. So that'll probably be a platform or a dedicated, more bespoke product that we might introduce for sort of high net worth individuals that are looking for that kind of exposure. Because for them the flexibility, the ease of using our platform to get exposure, the convenient base is a very strong value proposition. So that is something we have considered in the past, and we'll probably get to that at that stage. But we feel like there's a lot of returns to be generated. We focus a lot on income generation, and there's a lot of opportunity in sort of I would say the the mid-tier market where we're talking about apartments, etc. Because one, they're more liquid as well too in terms of buying and selling, high transaction from a renting perspective as well too, from a holiday home perspective, and your downside is relatively limited in those such opportunities compared to something really expensive and really prime.
And are most of the properties in Dubai, or are they spread across the UAE?
No, we're only focused on Dubai. This is where we see a lot of value in the country. So we've been very much focused on Dubai. There's a lot of access. It's a very transparent market. There's a lot of data available as well too, which makes our life easy in terms of doing our homework on them, and then also providing the data to our investors. So Dubai is sort of the preferred market for us at this stage. We do envision to expand our platform to introduce international properties onto the platform. With the strength of the dollar, this is something we'll be introducing in the new year in 2023.
Okay, and finally, what would you say are the pros and cons of investing in property this way? I mean, for example, can your returns eventually put you on the property ladder for 100% ownership?
A lot of the pros is one, it gives you access, easy access to the real estate market. It allows you to build a diversified portfolio within the real estate space. For many people, it becomes their most significant investment of their life, and for many, it becomes a very concentrated investment, meaning majority of your capital, 70-80% of your capital is tied up in one asset, and that's not a very smart way of investing your capital. So what this allows you to do is have appropriate allocation to this asset class, and within that you can have diversification, meaning you can have exposure to multiple assets. That's another pro. You get access to all the data, so you're making effective decisions. You're trying to take emotions out of it. You're trying to make a rational decision. You can manage your risk better, right? And you get regular income. It's fully managed. You don't have to worry about anything. So those are all of the pros, right? From a con perspective, obviously we have to be fair. This is a relatively illiquid asset class, right? Real estate in general, and then when you're having a minority interest in that through our platform, liquidity can be limited in terms of exit. We can convince all the investors to exit collectively, or you can list your shares on the secondary market on the platform, but there has to be a buyer on the other side. But having said that, there's a lot more buyers for 500,000 dirhams than there are buyers for 500,000 or million dirham property. So in theory, there could be more liquidity, but it is an illiquid asset. So that's one of the cons. In terms of market fluctuation and so forth, I think that's probably a pro, not a con, because you have put small amount of money and you've diversified it. You can be more patient. You can ride out the cycles, because most of these properties are rented. In worst case scenario, your rents might come down, so your returns might come down a little bit, but you're still getting an income coming from it. And if you planned your investments appropriately, you're not desperate for that liquidity, you don't need to exit those opportunities and crystallize your losses. So it gives you a lot more flexibility. So it's not really a market fluctuation is not really a difficult thing. It's just a very positive thing in terms of how this the platform works. But you are exposed to real estate, right? So if real estate prices do come down or rents come down, that has an impact on your return profile. But the beauty thing is, it gets you started on the property ladder. It gets your money working, so you're creating a secondary source of income. And if you're very disciplined with it, you can eventually generate enough cash and build enough equity into this that one day you can amass enough capital over here where you can use that towards a down payment or towards purchasing a full property onto the platform. And then over time, if you have an investment in one particular property and people are selling their shares, you can accumulate shares in that particular property and eventually get to a point where you can own all 100% of that particular property. The whole idea over here is to give people the ability to put their capital to work beyond just stocks and bonds. Like, average person is restricted to your traditional asset classes like stocks and bonds, right? They don't get access to alternative assets like real estate and so forth. Whereas the wealthy have plethora of opportunities to manage their capital better. And what we're trying to do with this platform is allowing people to imagine their investment portfolios beyond stocks and bonds, right? So if you have $100,000 of investable capital, you can't do much with that if you want to buy real estate. So majority of people just invest that money in stocks and bonds, and they're great investment opportunities, but they're also quite volatile compared to fixed hard assets like real estate. So the idea with our platform is, with $100,000 investable capital, you can invest $50,000 dollars in stocks, $20,000 in bond, and $30,000 in real estate using our platform, depending on your return profile or your expectations, etc. But the idea is we're giving people ability to imagine an investment portfolio beyond the traditional asset classes.
And considering the current bear market at the moment as well, trying, sort of finding other viable investment options.
100%, right? I'll give you an example, right? So in the summer, we exited one of our investments, was a studio and marina apartment. So investors bought it in February of 2021. They exited in the summer, about 17-month hold period. And they walked away with 40% return, annualized about 30% return, right? So obviously very attractive returns, but the key message there is during that same 17-month period, crypto was down 65%, Bitcoin particularly. The stock market was down 20-25%, depending on which stock market you're looking at. If you look at the major US indices, they're about 20-25% down during that period. So if all your investments were, and the bond market was down as well too. So if all your investments were in those kinds of instruments, your personal portfolio would have taken a hit. But people that had some exposure to real estate, they would have balanced that out. So that's the key message that we try to tell people. Diversification, true diversification is not owning 10 stocks in a stock portfolio. You're still exposed to the equity markets. That's good that you have diversification within your equity portfolio. But true diversification is when you have investments in different asset classes that have different volatility, different risk profile, and different return profile, because you want to look at your investment portfolio more holistically and manage your risk better.
Thank you this week to Siddiq Farid, the co-founder of SmartCrowd. If you would like advice on your personal finance issues, you can write to me at pf@thenational.ae. And remember, PF stands for personal finance. Please do subscribe to Pocketful of Dirhams on your podcasting app to receive weekly updates, and also leave us a review so we know what you think. This episode was produced by Arthur Edison and Thomas Smith, and I've been your host, Felicity Glover.